Wayne A. Label, Accounting for Non-Accountants, the fast and easy way to learn the basics. Dive into the essential world of accounting with Accounting for Non-Accountants, the fast and easy way to learn the basics by Wayne A. Label. This book breaks down the often daunting subject of accounting into digestible parts, serving as a reliable guide for anyone keen on understanding the financial lifeblood of businesses, from lemonade stands to global enterprises. You'll explore the fundamental tools and concepts that underpin all financial decision-making, including balance sheets, income statements, and critical financial ratios. By unveiling the core aspects of financial statements and their profound impact on all levels of business, this book offers a roadmap for strategic planning and fiscal health assessment. Prepare to unlock the wisdom of financial language and gain practical insights that empower you to manage financial challenges deftly, whether you're an entrepreneur, investor, or simply managing personal finances.
Accounting's essential role. Accounting is far more than just keeping track of numbers. It is the critical language that informs sound financial decisions, shaping businesses and personal finances alike. At its core, accounting involves recording, classifying, and summarizing economic events via meticulous documentation, journal entries, and financial statements. These processes serve not only to catalog company history but also to spotlight strategic insights that optimize financial outcomes. Accounting transcends the typical image of number-crunching individuals, playing a vital role in every industry and venture. From small neighborhood businesses to global giants like Amazon, accounting provides the foundation to assess financial health and direct strategic initiatives. Critical managerial decisions in areas such as R&D budgets, marketing strategies, human resources, production, and sales depend heavily on the insights gained from precise bookkeeping. Financial statements, including balance sheets, income statements, cash flow statements, and statements of retained earnings, are the key tools accountants use to communicate insights. These documents analyze inputs, outputs, depreciation, profits, and liabilities, transforming raw numbers into comprehensive strategies. They illuminate business performance, highlight growth opportunities, and signal potential risks like bankruptcy. Beyond corporate use, accounting principles offer individuals the tools to manage household finances, evaluate investments, and secure their financial futures. Bankers assess a company's creditworthiness using financial statements, while government agencies rely on accounting data to inform economic policies and evaluations. Mastering accounting's principles empowers entrepreneurs, policymakers, and investors to make informed decisions, unlocking opportunities and steering toward more promising futures. Financial storytelling. Imagine a lemonade stand in your neighborhood. By understanding its finances, you can grasp the essentials of balance sheets and income statements. These aren't just numbers but stories that reveal the financial health of any business, whether it's a humble lemonade stand or a large corporation. A balance sheet is a snapshot of what your stand owns and owes at any given time. It lists assets like lemons, cash, and equipment, and liabilities such as any loans, say, borrowed from your parents. Also part of this picture is owner's equity, essentially what belongs to you, including any profits you've kept or sums you've put in. Assets are categorized into long-term, like machinery, short-term, like cash, and intangible, like brand reputation. The goal is to have assets outweigh liabilities, indicating the business is stable and capable of growth. On the flip side, the income statement captures the flows of money over time, narrating how much your stand makes and spends. It shows revenues, the funds from selling fresh lemonade, and expenses like buying sugar or renting venue space. The net income or profit is what remains after all costs are subtracted from your sales. Ideally, you want revenues to climb and expenses to stay manageable, boosting profitability. The interplay between balance sheets and income statements provides both a static and dynamic view of your stand's economic condition. A balance sheet gives a momentary glance at liquidity while an income statement offers a broader perspective on income flows and expenses over a time frame. These documents together are like maps and guides, enabling business owners, budding entrepreneurs, and investors to make informed choices to drive financial success. Navigating short-term financial health. Entrepreneurs and investors often dream of future prosperity, but securing those aspirations hinges on one crucial task: ensuring a company's short-term survival. Financial statements serve as a diagnostic tool, shedding light on whether a business can clear its near-term financial hurdles, which is essential for continued operation and growth. A vital question in this analysis is whether a company can cover its immediate bills. A company's ability to promptly settle its short-term obligations indicates robust fiscal health and a promising future. Financial ratios play a pivotal role in this assessment. The current ratio, for instance, assesses the relationship between a company's short-term assets, such as cash or items quickly convertible to cash, and its short-term liabilities. Ideally, this ratio falls between 1 and 1.5, signaling a healthy buffer to manage debts. Complementing this is the quick ratio, which goes a step further by evaluating the company's capability to meet debts without depending on inventory sales or prepaid expenses, thus offering a stricter measure of liquidity. Another cornerstone of financial health is working capital, which is calculated as the surplus of current assets over current liabilities. A higher working capital indicates better preparedness to tackle immediate financial obligations. Yet, it's not just the quantity of these assets that matters, but their composition too. Cash remains paramount since it directly handles bills. Monitoring cash flow and negotiating proficiently with customers and suppliers can avert monetary crises. Easily liquidated investments prove advantageous, unlike inventory and equipment, which may not be readily converted to cash. Think of financial ratios and working capital like critical health indicators for a business. A decline in these figures may necessitate seeking additional cash, reducing expenses, or boosting revenue. Notably, the definition of what's healthy can vary by industry, making it prudent to analyze these measures against historical performance and sector norms. For any entity, whether a neighborhood lemonade stand or a sprawling corporation, meeting short-term financial demands is vital. Employing meticulous financial analysis and proactive strategies to tackle potential fiscal issues ensures businesses remain resilient and poised to seize future opportunities. Navigating financial futures. Ensuring a company remains solvent today is crucial, but envisioning its long-term prosperity demands a broader perspective on financial health. Financial statements are invaluable not only for assessing current performance but also for forecasting future success based on historical data and present circumstances. A company's growth hinges on steady and predictable profits, indicated by metrics like the quality of earnings. Firms with consistent revenue streams, such as subscription services, often demonstrate more stable earnings than those dependent on sporadic projects. The return on investment, ROI, is a key indicator of how effectively a company's assets are being used to generate ongoing profits and fuel growth. Analyzing sales trends, including growth rates and customer reach, unveils a company's potential for market expansion and profitability. Successfully engaging more customers and generating revenue that surpasses sales acquisition costs propels a business forward, enhancing its market footprint and profit margins. Additionally, retaining existing customers proves more cost-effective, with high retention rates signaling a reliable future income. Companies generating robust profits should also excel in cash generation, vital for funding innovation and expansion, particularly in capital-intensive sectors. Consistent operational cash flow empowers a company to invest in research, enter new markets, or acquire other businesses, minimizing the need for excessive debt. Financial ratios like debt-to-equity aid in evaluating this capability. Ultimately, a keen analysis of financial statements illuminates patterns that could either propel or impede business progress. By grasping sales dynamics, earnings quality, cash flow health, and funding strategies, businesses can pivot from merely reacting to challenges to proactively charting their futures. For enterprises, whether nascent or well-established, leveraging financial modeling is akin to wielding a guiding compass, essential for navigating the ever-fluctuating market landscape. Strategic, sustained management paired with visionary thinking becomes indispensable for long-term success. Mastering money management. Harnessing the power of budgeting transforms financial chaos into clarity, whether for personal pursuits or navigating the vast seas of business strategy. Benjamin Franklin's timeless adage, "Failure to prepare means preparing to fail," resonates profoundly when it comes to crafting a financial roadmap. Budgets act as your guiding compass, outlining expected income and expenses while spotlighting essential expenditures versus the optional. For individuals, a budget not only keeps spending in check but also lays down a path to financial dreams, turning aspirations into attainable goals. In the corporate world, this practice is mirrored on a grander scale, with each department contributing a piece of the puzzle to form a master budget. This comprehensive plan is more than just figures, it's an invaluable exercise in aligning resources with the company's strategic aims and optimally planning production and inventory. The budgeting process itself reveals much more than just costs and revenues, it unveils opportunities and illuminates areas needing attention. Anticipating market trends and pinpointing crucial spend categories enables businesses to make informed decisions. Should actual sales fall short, the budget acts as a diagnostic tool, prompting a strategic pivot or a cost-cutting review. Exploring changes in production costs can uncover supplier challenges or quality issues before they burgeon into major setbacks. Preparing a flexible budget is vital as it allows the agility to handle unpredictables and ensures that cash flow is well managed. Detailed cash flow forecasts signal when cash surpluses or shortages may occur, enabling timely, well-calculated investments into growth areas. Incorporating contingency plans, such as borrowing strategies and decision checkpoints, fortifies the budget against unforeseen shifts, keeping you on course toward your objectives. Budgets are the bridge between vision and reality, transforming ambition into actionable and measurable tasks. They empower leaders by focusing efforts on critical priorities, enhancing operational efficiency, and equipping them to face uncertainties head-on. In the end, a sound budget is the cornerstone of financial success, turning aspirations into achievements and propelling both personal and business goals towards fruition. Financial clarity through audits. Imagine financial statements as snapshots that capture the essence of a company's financial health. Like preserving a masterpiece's authenticity, auditors ensure these financial portraits are true reflections of reality. They meticulously scrutinize the financial records put together by accountants to confirm their accuracy and reliability. While internal auditors may examine their own organization's books, external audits by firms like certified public accountants add an extra layer of impartial evaluation, essential for both public and private entities. Government auditors, on the other hand, keep a vigilant eye on how public funds are utilized. A successful audit results in a clear report verifying the financial statement's adherence to standard accounting practices. Any ambiguity in these reports leads to a qualifying note, while downright misrepresentation raises significant red flags, demanding corrective actions and possibly legal scrutiny. However, audits transcend the mere detection of fraud or glaring errors. They play a proactive role in identifying minor discrepancies before they escalate into formidable issues. Through insightful recommendations, auditors help enhance and fortify financial procedures, paving the way for increased compliance and transparency. They diligently assess a company's risk management practices, crucial in today's intricate financial landscape. An independent verification of a company's financial state fosters confidence and stability, catching problems before they snowball into crises. This preventative function serves as a critical shield protecting investors, companies, taxpayers, and economies from the risks associated with unclear or misleading financial practices. Despite their complexity, audits are indispensable tools that underpin the integrity of financial systems, safeguarding the interests of communities, markets, and nations alike.
In summary, Accounting for Non-Accountants equips readers with the foundational knowledge needed to navigate the complex world of accounting. Key takeaways include understanding financial statements like balance sheets and income statements, which are invaluable tools for assessing an entity's financial status over time. The book emphasizes the importance of financial ratios and working capital in diagnosing short-term fiscal health, while long-term success hinges on analyzing sales trends and cash flows. The insights into budgeting and the role of audits highlight the significance of planning and verification in financial management. Ultimately, this comprehensive guide demystifies accounting concepts, ensuring that readers can forecast, strategize, and steer their financial paths with confidence, whether for business ventures or personal growth. Unlock the potential of informed decision-making and secure your financial future with this essential toolkit for non-accountants.